my weekly chart review. It's April 2nd. You know, I like to do these reviews while all the markets are closed, just to get a clear idea. We don't have any movement right now, except, as you see, the only thing flickering is Bitcoin and Ethereum. Crypto doesn't stop trading, so that's why it's going to happen. All right. A lot of the markings I have are from last week already. There's really been no changes, like on the grand scheme of things, as far as predictions go. There were a few that didn't work out, you know, so I reanalyzed those just to see if there's any other level that they could potentially hit. So we'll just dive into it. And again, we'll do Forex first, and then I'll dive into Nasdaq and stocks later. And I'll briefly jump on Bitcoin as we get to it. You know, it'll be the 6th one down. Just because there's been some speculation with a couple colleagues of mine how far down it's going to go from this slight pullback, or how far up we potentially can go again before we see another big pullback. So we'll just jump into that shortly. But yeah, until then, let's go over the pair. So right now we are on Aud Cad. And yeah, so from what I've seen, it's just this little wick on the 22nd of March was really the striking point. Like, that's the only time that it touched this line, and now it's just kind of been hovering around this volume line. I did it based on previous volume there. That's where all the price is hovering now. So between these two currencies, there's really not much excitement at this point in time. As you can see, it's been very big wicks. This is on the 4-hour scale, right? So I mean, we're talking candles and wicks of about 67 pips within 4 hours. You know, it goes up and down, up and down. It's you know, it's really difficult to gauge right now the time to get in. However, I mean, if we still expect this to go down, by we I mean I, if I still expect this to go down, I could see kind of a point of resistance where all these wicks are hitting, right? We just draw it across right there, right? So for me, I would say the next time a wick touches this area, or grab a trade for the sell, especially because we did not see a pullback going this high again. And yeah, that's all I can really attest to for Aud Cad. The Canadian dollar will be a little stronger than the Australian, simply because AUD is not raising its rates until December, they said. So they're going to be very stable. They want their economy to recover, whereas we know inflation is going to be a really big problem because governments all around the world kind of gave away a whole bunch of money to be able to fight the pandemic. So here we are. Until that gets squared away, I believe we're going to be seeing Canadian dollar a little bit bullish, so we're going to see this go on the downside. I don't know how deep, maybe just to here, around the 91,700 mark, you know, this area, so we might be able to draw this a little bit deeper, you know, somewhere around there. And yeah, not a bad ratio to grab. You know, I'll bring this down once more, you know, just to show that once the wicks hit off, or any candles. And for stop loss, I mean, I would like to do 35 pips just off that tip of that wick. If it goes above that, it kind of shows me that you know, we may not be as bearish as expected on this currency pair. I mean, the safest bet would be way up here, right? But we want to try to get a little bit of a snipe on this with about 35 pips, so 34.6. All right, Aud Chf. I wrote a note for myself, you know, 2 potential trades: sell going down at the 618 retracement, and a buy moving from the institutional play just below the 618 retracement. If you're wondering what that is, so let me just draw a Fibonacci, right? So we do, what do we want to do? This guy, right to the top, right there. Hang on a second, did I do it from that part? No, I did it from the lowest point, actually. It was right there. So let me just draw that further back. Here we go. All right, so 618, this is what I'm talking about. The black line is pretty much there. The only reason why I'm thinking it might go slightly deeper is because we have an institutional play right there. So based on that, what we're going to see is two potential plays. The safest would be waiting for this to trickle down further and then grab this on the upswing, since everything is trending upwards in the long term. You know, I'm not quite sure if we're actually even going to see a pullback this deep before running down. That would be the ideal situation, where we have the price kind of come up to this area here and then slowly start to work its way down, you know, kind of do this little cup right there and back up it goes, right? So that's kind of what I'm expecting with this currency. We'll see if it plays out. You know, if it does, that's two fantastic plays to take. Yeah, that's all I really got on this one. Very straightforward. Aud Jpy. So it drew up a red zone here, and it kind of blew right past it. However, hard rejection off of whatever zone that is going to be. So we're going to have to jump on the weekly, because that's going to be quite far back. So we'll see where that black line hits, and all the way back here to 2015. All right, so unfortunately 7 years ago doesn't really play much significance, but you can kind of see that you know, the all-time high was way up here as far as Aud Jpy is concerned, and here we just had you know, price kind of playing in between this zone for about 2 years before going lower and never coming back until now, right? So as far as that goes, you know, the yen, the Japanese economy is, as far as per capita, the most indebted country in the world. I find it hard to believe that their value of their currency is going to drop as hard as it has been, but it is entirely possible, right? Like, they've had a different economy recovery plan compared to everybody else, so we'll see how it plays out. We could potentially see this go all the way up to there, right? We are already very, very overbought on JPY everywhere, right? So if you take a look at the MACD here, I mean, we're still climbing, and here we already had a pullback, which was March, right? And I mean, by pullback, it wasn't even that significant. Like, it's just been climbing this entire time, so that means the yen has been losing a lot of value, right? We've been climbing ever since COVID of 2020. Like, that's when you know, they were worth the most, and now they're starting to trickle the opposite way. Almost, you know, they have the potential to be going, you know, losing what, over half of their value, right? Like, especially against the Australian dollar. That means they went from 59.967 AUD to yen, and now they are where it closed, 91. So I mean, if we plug that into our calculator, I'll just grab a percentage for you quickly. 91.821 equals, so that is 65% from 59. So I mean, we're looking at a 35% drop as far as the currency value is concerned, right? There's that's pretty significant. You know, it could potentially go all the way up to 105, right? Which would take that to almost like 45%, 46. You know, just to be accurate, let me do this quickly. Yeah, 44%, 43%, around there. So I mean, that's a significant decrease of the value of the yen. All right, it's totally possible, right? I mean, I'm looking for a retracement value from this point, not just a retracement, but a pretty significant pullback. I'm not sure if we're going to be pulling back as hard as I originally thought. Definitely not to our COVID lows, but around maybe 85 would make a lot of sense. That's just a fib retracement, but that will take quite a while to get to. As far as it is right now, I would definitely say that, you know, if we do not go lower than, like, if we do pull back and not go lower, then we're going to be looking at a zone of about the 105, like I marked up here, from, like, man, what was it, 2012, so 10 years ago. All right, Aud Nzd, this has just kind of been slightly going up. This is my trade idea. You know, heading up until this was a resistance zone in the past. Could potentially break through that, but Nzd is showing a little bit more strength than the Australian dollar. So if it does work out the way I plan, we're going to see a little bit of a deeper push upwards before retracing down. Aud USD, kind of already in that trade, right? But it's been going sideways all week. Like, it's not very exciting. As far as strength, the US dollar has been showing some signs of livelihood there. Liveliness, whatever. But the Australian dollar, although overall weak as we know it to be, it kept its momentum. So it's been kind of hovering around entry for the entire week. I mean, that's not a fun trade to be in, right? Just sitting at times minus 26 pips and going as high as, you know, 59, 60, something like that. And now we're just kind of sitting around 15 pips in profit. I mean, it's not an exciting thing to be in right now, but you know, I still strongly believe that we're going to be headed down. I think right here is just kind of that resistance zone before we start seeing a move, right? And when you have long long moves, I guess, in the opposite direction, it takes a little bit of time to lose steam before going, especially if it's not manipulated in any way, right? A lot of crazy moves are manipulated by news, but when you have a lot of stagnated news or, you know, some negative, you had the US dollar being strong, but news kind of going in the contrary direction. So it's saying that the US is struggling with particular cases here and there, right? So that's going to influence a couple moves in the opposite direction, right? So that's why you see these big green candles occasionally, or these gigantic wicks and almost no candle body. All right, Bitcoin. What do we see in Bitcoin? I'm going to switch this guy over to the daily. That's what I like working off of with this. Oh. All right. So our initial, let's see, so this was 21 where we had our giant push upwards all the way to almost 70,000, and then the pullback to about 33.5. Let's see how deep it went. Yeah, 33,000, and then pull back to about 34,396. So that was about $96 off or so. Like, I was guessing around this area prior, but now, you know, when we've see that there's areas of liquidity keeps going down, but finally it broke through, there's going to be a lot of panic as to, oh, maybe Bitcoin isn't going to be climbing, or governments are going to be doing this, and, you know, is it the right time to get in? Honestly, guys, it's completely dependent on how you trade. It doesn't matter what you've heard or what you've seen or what people talk about Bitcoin, because every expert can kind of lead you in any direction that they want, right? Especially if you like to believe them. The simplest thing to do is just mark up charts, right? You can speculate all you want as to how deep or how long any sort of run is going to go, but charts really just tell you exactly as it is. You know, there's going to be a whole lot of people that are going to tell you it's going to go up to 100K. There's going to be a whole lot of people that tell you it's worthless, it shouldn't be worth what it is now, it's going to head down even lower. But let's just analyze based on the information we have, right? So we made our high, we've made our low, and then we had our little pullback before starting our run. All right, I believe we're on a bull run. I believe this bull run is going to last for a few months. The reason being is because every single, you know, cryptocurrency, any valid one anyway. I mean, I'm not talking about Shiba Inu here or Dogecoin, right? I'm talking about Solana, Cardano, Loopring, Bitcoin, Ethereum, whatever. I mean, just to throw a couple names out there. They all follow a similar structure, right? Same with American stocks, the stock market. Nasdaq, New York Stock Exchange, Dow. they're very, very similar when it comes to how deep something goes and how far it pulls back, right? And judging by what we see right now, the Nasdaq and cryptocurrencies follow a very, very similar structure. Okay, and on Nasdaq, like I'll pop it over right here. Okay, and I have to switch it to the 4-hour. But as you see on the Nasdaq, I am bullish on this as well, right? I called the bottom twice. This one went a little bit past the first bottom, but that's fine. You know, I mean, I still expected it to kind of go around that area. And what's happening now is we're having a slight pullback going on the Nasdaq too, right? But as you can see, over the last several weeks, we've slowly started trickling up. Okay, look at Bitcoin. You know, it kind of shot up first on February 28th. Let's see where we're at on Nasdaq, February 28th. Right, February 28th, we're around here. So it shot up. You know, Bitcoin is on the daily, sorry, and Nasdaq's on the 4-hour. Right, so we saw a shoot up and then it started to pull back down. All right, so look, February 28th, it shot up and then it started to pull back down. We've hit our bottom again on Nas March 15th. Bitcoin, we re-entered, we kind of left that area and retested those bottoms several times, right? So here we go, March 14th, March 14th, March 15th is right here. Okay, so it went slightly higher, but it kind of went sideways as Nasdaq, you know, was slightly going sideways before dipping hard and reversing very quickly. Okay, now look what happened here. We hit this and then we started going up, right? There was like 1 or 2 days that we were kind of in the negative, but overall we started to go up, right? Now we had a pullback for the last 3 days, right? Not counting this little green guy. We had 1, 2, this one didn't grow past the one previous. So I mean, we've pulled back a total of what? Let's see, $1,400 on Bitcoin. You know, oh my gosh, that's the bull run's over, right? Look at the Nas, right? Similar idea. It pulled back slightly from its peak over the last 2 days, right, by about 445 points. It's nothing detrimental. It's they're following the same similar structure, right? Because a lot of these this index and Bitcoin, they all have the majority of retail traders jumping in on this. Yes, granted, there's a lot of money involved in them as well, as in like you know, very affluent, rich folks buying up these cryptocurrencies as well. But you need to understand that as far as structure goes, the stocks and crypto will be traded very similarly with a lot of retail interest. Okay, so as you see the move on Nasdaq going up over the last few weeks, you know, same thing with Bitcoin. You can see the move going up over the last few weeks. Okay, I don't believe that this is going to be over until about this area. Okay, this is kind of the zone I'm thinking that this bull run is going to end. So we still have, let's see from where we're at right now, we still have, you know, anywhere from 15,000 to 18,500, $18,700 for Bitcoin to gain before we start seeing any sort of a real deep pullback. And to be quite honest, as far as it'll pull back, I'm suspecting that it'll kind of come between that $35,000 to $38,000 range again, right? So that's when it's going to be pretty deep. If not, if it's not going to be just there, it could go even lower, right? So that could be where potentially we see that 29,000, 28,000 range hit. And that's not going to be fantastic. So, you know, my recommendation for that point is when we hit this peak and you see a little bit of a stagnation, maybe the majority of your stuff you kind of just get rid of and sit tightly on your hands, you know, before pressing any more buttons. But yeah, that's just an idea. That's my recommendation. Anyway, we'll move on. Cad Chf, you know, this one actually worked out quite nicely. I'll switch it back to the 4-hour. Not huge profit yet, but at least it's moving in the right direction, right? Like we set a 65 pip stop loss, quite deep, and we're only 71 pips in profit. So right now that's 1-to-1. For me, like I said, if I'm 1-to-1, I move my stop loss to break even. So right now this is a risk-free trade. So good to go, and you know, there's not much to draw up. I believe it's going to continue. Cad Jpy. Yeah, so this one I drew up. We had a very sharp move in the opposite direction, so that tells me there's an institutional candle formed. I'm expecting a bit of a retracement up to this black line here, so hence I drew up the short position here. The trouble is it's 91 pips. Like that's quite large for me to want to make any plays on. So for something like that, what I'm going to do is wait for it to kind of enter the zone, and then wait for my EMAs to kind of cross on a larger time frame for me to be comfortable entering the trade. Right, as you can see here, where it kind of hovered in and out, and then finally it started moving, and all the EMAs pointed in that same direction. That would have been a very good time to enter the trade. This, quite possibly, we could go sideways, we could completely go down, you know, we could reverse a little further. Like, there's multiple things that could happen, right? This is just an idea. However, as you see here, this is ideally how I would like to play out, so that all EMAs are consolidating, and once they split apart, this would be a good time to kind of jump in an entry, right? We'd be looking at somewhere like once they all cross each other and they're all pointing up, maybe at this candle here, at this candle's close, right? Oops, sorry, I have to close that one off. It may seem like late entry to go in on that guy, but this is almost guaranteed at this point, where you see all the EMAs kind of spreading out and moving up, right? If you do have a pullback, granted, I mean, set yourself up a reasonable stop loss at that point. But, you know, even if we were able to catch this one, what a smooth ride it would have been, right? Until the EMAs finally switched again, which was right there. So if we're going, you know, from EMA to EMA, let's say we jumped in a little late, went to there until they switched again, that's still 669 pips. I'm good with that. You know, it's a very nice run, although it would have taken, what are we seeing? 3 weeks, 4 weeks almost to fill, right? So March 10th to March 29th, so yeah, about 2.5 weeks. Not too shabby. Okay. Chf Jpy. This doesn't really strike me as anything that, you know, anything different. I prefer not playing CHF pairs if I can. It's a very, pardon me. It's a very stagnant moving pair. Well, not pair, but currency. I prefer Aud Jpy, Cad Jpy, Usd Jpy. Anything with CHF, I mean, trades are good, but, you know, they have a potential of kind of doing a whole lot of barcoding, right? And that's not very exciting. Ethereum Usd, very similar to Bitcoin. I mean, structure for the two of them is the same. We might see Ethereum be a little sharper just because it's not as expensive as Bitcoin. Euro AUD, we see this large, long move all the way down. You know, I am hoping for that proper pullback. I thought that we would be jumping in there somewhere here, but we've seemed to cross EMAs again. So it's a very likely scenario that what we're going to do is have the bands kind of contract in this area before moving upwards. Right? And that's actually a good sign. Like, we want a little bit of consolidation. It would tighten up our entry that much better. Okay, so what we would see is, as you've seen, all this is still moving down, until the white and the pink kind of start reversing and the yellow and red cross each other, right? So my Fibonacci EMAs, as you are aware already from past videos, the 3, the 5, and the 13 are my yellow and red. The pink is 55 and the white is a 233, right? So do your Fibonacci like I did a lesson on it before. It's crucial. I find those numbers to be much more helpful than just arbitrary, you know, 50, 200, 800. I mean, if we're picking numbers out of the air, why not 75? Why not 265? You know, why not 700? Why does it have to be 800? What's the significance of 800? You know, I mean, it doesn't, the number means nothing. So if you guys want to use it, by all means. You know, I like to use something that actually has meaning in money and nature. Euro Cad, similar sort of situation to Euro AUD, right? Except it's a much sharper moves as we've seen, you know, higher pullbacks and whatnot. But I knew I drew all my Fibonacci lines kind of going down, because overall we're very bearish for a few years now, like since COVID hit, right? Like we're looking, this was the March, right? We had a bit of a dip and then back up to kind of retest that area and then slow trickle down all the way down, right? So now we've kind of hit this area. Let's do Fibonacci's on this. Let's see how it's going to look like, okay? So from this guy down to the lowest point, which would be right here, we had a pullback past the 618, so right there, okay. So new Fibonacci from here to our new lowest point, which would be right there. You know, do we have a deep enough pullback? Not really, but it's still pretty valid. It's as far as it goes upwards. We take it from here, we draw to our next zone. Here we go, you know, we had a pullback to the 50%. We take it once again from that area, pull it back. You know, so what we've seen is between 50 to 618. So I would say that around here we might see a kind of a stop before it goes even lower, right? Entirely possible. This is kind of what we've seen happen in the last 2 years, so I would say it seems very likely that would be the scenario again, right? So if you're looking to take a buy on this sort of trade idea, just be aware that it might end around here. I mean, it's still like 300 and a potential 430 pips to grow, right? So if we switch that over back to the 4 hour, we'll see how that all looks like, and I'll just clean up the chart. I'll dump all those fibs, okay? So based on what we just saw, you know, how deep would we be able to go with this one? Let's see if we grab the fib from this one, right? This pullback to this newer low, right? As you see, we kind of already went to that 50% mark. So I would do a Fibonacci trend-based extension, right? So we go high to low to new high, and there's our potential target, right? Kind of hitting around that area. So it's entirely possible to grab a sell on this. There really isn't much more structure to go off of. It is trending down, so that's definitely in our favor this way. But yeah, it's a slow-moving pair. It's not going to give much excitement as far as that's concerned, right? Like from this high, what do we have? This high to this low, that's 500 pips, and it took, yeah, over 3 weeks to hit. It's not too bad, I guess, right? Like it's still moving at a relatively quick pace. Just may look small because I've contracted all my bars. Like that looks more significant, right? That looks like nothing. So yeah, a very stable moving pair as well. I wouldn't expect this to be jumping up anytime soon. So yeah, might be a very good level to jump in on. We just had the EMA switch right here, and everything's pointing in the right direction. Yeah, seems like a pretty solid trade to have. Okay, Euro CHF. What do we see here? Yeah, so this is just a continuation. My trade idea from last week has already hit here. You know, it was beautiful. Like what a snipe that was. Right, grabbed it right here. It only went, I think, like 20 pips in the negative before reversing. So let's see, 21. Not bad. Right, we still had like a 35 pip stop loss. And right now, I believe we're sitting at over 100 pips in profit. So that is fantastic news. 134 pips. That's really good. Right. So it's been a decent week for Euro CHF. That worked out very nicely. Euro Gbp. We've had our pullback to this area first. That was 2 weeks ago, a week and a half ago. You know, we broke through that area already, going upwards, and that worked out nicely as well. You know, we expected. I gotta stop saying we. It's me. I'm doing this, not you guys. All right. So I expected the move up to fill this gap, and that's exactly what happened. But it was interesting because it got filled by another imbalanced candle, right? So what we have here now is I'm expecting something like this to happen. You know, kind of trickle down, go to this end, start moving up, and maybe hovering around this area, because look at all these imbalances that were formed, right? And I'll delete that. Looks kind of like a butt. But yeah, that's kind of what I expect with this guy. It's not really clear just yet because as far as structure is concerned, we've hit a lot of, you know, supply zones around here. Like you could see the origin of this supply zone was there, kind of went a little bit above it, and then again touched it, and then it kind of shot up and back down, right? So it tells me that it doesn't really want to go much higher. But yeah, we'll see how deep it retraces. If it pulls down to this area, that will give us a very good indication that we want to go back up, right? Especially if we don't cross this support line again. Euro JPY. Yeah, I whiffed on that one. What can you do? I expected it to pull down a little sooner than it actually did, but as we saw as the week developed, you know, we've kind of formed our high and then we haven't broken it since. So very likely this is the play to watch for. Right, these guys right here. Right. So if I want to kind of redo that trade, I know this is still going to be going down overall. Maybe take the trade, something like that. Yeah, stop loss has to be quite large though. At a entry kind of around this level, but yeah, the stop loss is quite large. I'm going to see if it plays out similarly to pair I discussed before, so that when it kind of hits that area, we have some more consolidation so the white and pink can catch up. And then when we have a solid EMA switch, it'll be a better potential entry. And like even if we, let's say, even if I took a buy here, right, when we had all EMAs crossing around this area, you know, the worst it would have been is maybe like 45, 35 pips stop loss before climbing, right, as everything is kind of shifted moving upwards, and that's still quite the gain, right? A potential 700 pips before we saw any sort of pull downwards. Very likely there's not going to be a whole lot of people that grab it around the 700 mark. We probably would have seen more exits around 600 pips. Still a great chunk to grab. Euro Nzd. You know, I want to say that this is going to be bullish, but if the AUD has taught me anything, it is nope. You know, however, you know, if we take a look at this, right, where we see this big candle form, we had a lot of volume kind of play around that 50% mark of it, right? So what this is telling me is that it really does not want to go any lower, and we formed a bit of a support line around here, right? And now around that 50%, we're seeing a bit of rejection. So if we head up, that's fantastic. Euro USD, what are we seeing here? I was seeing Euro kind of be short-term bullish, even though everything's kind of headed to the downside. I was still thinking we're going to go a little bit higher than what we're currently at now. Maybe not to 523 pip TP, but definitely higher than you know, 70 whatever pip gain. Good entry though, right? Like we had a 35 pip stop loss, and I mean it went down about 21, 22 pips again, just like on the other one we looked at. Let's see, 25, so a little bit more. But yeah, this one overall, its highest point so far in the move was 206 pips. Right? I mean, if we're talking about the wick as well, 215. Right now, we're about 79 in profit. Again, stop loss should be at break even, and you know, when it was at 200 pips with a 34 pips stop loss, 35 pips, we're looking at a 1 to 7 at that point. Hey, you know what? You could have cashed out, or you could have taken partials. Very possible, you know, and not to say that every single 500 or 600 TPer is going to make it. But, you know, wishful thinking. At the same time, this still has room to grow, right? So I'm going to be looking for a potential re-entry when the EMAs shift once more. But here's one interesting thought. Look at the Fibonacci, right? I drew it from here to here. And now I'm not even going to draw a new one. I'm just going to move it from its new low point, which is from here, and its new high point. So let's just connect them. Right? New low point, new high point. It's almost identical to the previous move that we've had. So if that tells me anything, I'd be looking for a pullback kind of where I drew this blue bar, right? If we go back down that far, that's a potential for a re-entry going upwards as well. Yeah, it's almost exactly as the move we just had, so that's going to be a fantastic sign. All right. Oh crap, I'm deleting everything. Whatever. So there was the potential idea. I have to redraw that, so give me a second. I think it was somewhere here that we had the entry. Yeah, something like that. All right, and let's just say that's what it was. All right. So yeah, that's what we're going to be looking for, right? To see if it goes a little bit deeper. I don't expect that it's going to hit original entry zone, but maybe around, you know, already 35 pips, maybe 40 pips in profit, and then reverse to the upwards. Gbp AUD, completely with that one. You know, I did not expect, after all the news that we've had, the AUD would still have some sort of influence, but it sure did. Right, so I'm just going to delete this one. So that is 2 trades that really just didn't work out, but you know, several of them that we would be in strong potential profit. Gbp Cad, you know, I had an idea, I thought it was going to go up here, but I didn't really draw anything up. I wasn't too certain. You know, both currencies were showing strength, just wasn't sure which one is going to beat out. So I didn't take much of an idea. I just thought it was going to be somewhere around there. Didn't happen, that's okay. You know, broke through both lines of support that I believed we were going to be encountering. So, you know, back to the drawing board with this guy. I'm going to leave it alone for now. Gbp Chf, we've hit a support line, and that's where we've been bouncing off for the last 2 days. And yeah, I mean, as far as anything going higher, I mean, these wicks just slightly etch out the previous ones. But yeah, I mean, judging from where we've been in the past already, I would think this would be a good idea to grab a buy and maybe take it up to there, right? From one support to the resistance line. Like, that is a potential, what are we looking at? 492 pips. Not too shabby. You know, I would, I'm gonna grab this trade when it's available next time with a limit order. You know, maybe 30 pip stop loss is reasonable. If it goes below that, then, you know, I have a feeling it's gonna be invalidated anyway. And then potentially, yeah, maybe not that high. I would see where support resistance lines are, kind of around that area. We see a lot of wicks touching. So 440, you know, 31. So we're looking at a 14-to-1 ratio. It's pretty good. Gbp Jpy. Yeah, I'm expecting a move to the downside. Just the question is when. This is a very good indicator that this might be our 50% that we watch for, but if you know anything about that, it is 288 pips to watch for. Like, that is a gigantic gap. Stop loss of which would have to be around 140 pips, and that's a little bit rich for my blood. You know, I don't want to have stop losses that large when I can make potential 300 or 400. You know, I would have much rather take plays that are 20 pip stop loss and 60 pip gains rather than, you know, 200 and 600. It's the same ratio. I'm just waiting weeks and weeks for that to play out rather than maybe a day. So I'll pass. Gbp Nzd, similar thing. Was expecting a bit of a move upwards, but it didn't quite grab the area I was expecting to. Like, once this hit up, I was hoping for the next candle to kind of close green, but that didn't happen. Right, so took an entry there, triggered stop loss, 40 pips, a little bit, you know, disappointing, but I have a feeling we're going to be seeing the same thing like we did on Gbp AUD. Gbp USD, kind of stagnating right now. I expect this currency pair to go lower than what it is right now. And then NZD pairs. Kind of all over the place. I did a fib channel. Doesn't really seem to be working out so well. Nzd Chf. This one's a little bit better. Like, we're having clear support right off that red. Right, as you can see, candles just close on it. Right here, we've been closing and wicking off it. So it's showing me that that is a potential support zone to take it higher. Now, how high, I'm not quite sure. CHF is showing like very strong neutral, I guess. It's really not doing much, but for NZD beating it out, I don't think that will be happening anytime soon. As we've seen right here, even on the MACD, it's kind of, you know, the histogram is pulled up to show us that there's really no more sell volume and the price is about to shift going up. So very likely we'll see a buy. I would say maybe around this blue area here, this blue line. That's been pretty solid as far as a target zone, right? So from where we're sitting now to where it could go, we're looking at maybe 110 pips, you know, but at the same time, like I said, if we aim to grab 110 pips, right, somewhere around there, maybe even 114, our stop loss is only going to be, I would say right there, 20 pips. So that's still a 5.5 to 1 ratio. Right, not too bad to risk, right? I would say that wick, I wouldn't really validate that one. It's more where the candles have been on an average, right? So if we want to take the entry as soon as markets open, that's where it would be. Otherwise, you know, just wait for a couple hours. Typically, as markets open, brokers have really crazy spreads. It's best to wait a few hours for them to kind of balance out. Right, because you could enter with a 20 pip spread rather than the 1.5 or 2 that you're used to. So even that right there, just the spread could be your stop loss, and that's not what we want. Nzd Jpy, similar story to every other JPY that we have. I would just play, you know, Euro Jpy, USD Jpy, or Cad Jpy. The AUD and the Nzd have a history of doing some crazy wicks. Right, and by that, let me just show you what that would look like, right? I know this is on the weekly scale, but you know, let's take a point in time. Boom, let's grab here. Okay, and we'll switch it to the 1 hour. All right, so just a point in time, just to take a look as to what this is going to be like. Right, these large moves, like even though that this is 10 pips, there's been ones that are hundreds of pips that look a little bit crazy, right? So if we take this at full speed, just let it play out, like it'll take some time, but just to kind of illustrate what I'm talking about, right, with these long wicks that really shoot out in the opposite direction. You know, when you think that you're going to be, hey, you know what, this is consolidating, I think it's going to be going up, you know, it looks pretty good for an up, probably not, you know, it's still sideways, right, and then it finally trickles down, but this is what I'm saying right here, right, this kind of example. So you're in the trade already, and it's slowly moving up, and then you get this gigantic wick, right? And this is one of the only currencies that has a habit of doing this, right? And these wicks are like within minutes of themselves. So I don't even know if I can switch it down to 5. I think it's too low. Yeah, data point not available. It's too far away, right? So a lot of times those wicks, when they happen, they're like seconds. Right, when we're talking like if it looks that way on the 1 hour candle, that actual move with that wick being so long was 15 seconds to a minute, and that's how long it took to form for it to be bought and sold that quickly, you know. So very, very kind of, it's, you know, skittish to play around that kind of pair. Like even here, let's see what this looks like, right? We have 8.5, that's nothing. But yeah, there's times where there are huge spreads, and it's very, disruptive, you know, to your trade that you want to do, especially if you moved up your stop loss. Expecting a move to go maybe around this line right here to be able to take this position down. Again, not a whole lot of pips to snag, but you know what, good ratio. We have two clear lines of consolidation right here that we can grab, and it's not, you know, 15 or 20 pips, it's a significant 133-ish, 140, right? Good amount of pips to be able to grab when we know where rejection is happening. USD CHF, not quite working out as expected. You know, I thought we would see a move to the upside a little bit sooner, but it just took a little bit longer for that to actually happen. So this is what area it actually rejected off of before starting to climb. So very likely this coming week we might see something like this. You know, we have a move kind of going a little bit higher. Tight stop loss too, we can take probably, you know, judging as to how it's climbing, if EMA shift as planned, maybe 27.5, 28 pip stop loss would be reasonable for this pair to take. USD Jpy, like I was saying with all JPY pairs, I'm just not marking them all up. They're all very similar to each other. I would say pick one, and you know, pick one that you're comfortable with. They're all very similar to themselves. USD Jpy is a very stable moving pair. You know, if you think that it's going to be moving back down, as far as all JPY, if it gains any strength, the USD would be the better choice to pick. Maybe the next one up would be the Euro. I would avoid the Cad Jpy or Aud Jpy or Nzd Jpy just because they're finicky. All right. Silver, I just marked up here. Silver, you know, rich man's blood. If you want to jump in on that one, because this is a lot of pips, right? Works completely different. It's a 2,600 pip stop loss for a, you know, almost a 15,000 pip gain. Yeah, they're quite large, right? These gaps are not something to scoff at. So that is off the 1 hour. That's my potential entry zone that I'll be looking for. Okay, gold, I didn't mark that one up. Oil, like I said, I love it when gaps are going to be filled, and we've seen on XTI that they have been almost every time. Right, this is a tiny amount right here. I wouldn't really count that as a not filled gap. You know, we could potentially have a move further down to close it. Unlikely. You know, if our gas prices are to stay at a ridiculous level, it wouldn't make sense for barrels of oil to be trading at $95, right? That's just kind of, well, yeah, I guess it would make sense if, again, we don't want to talk about agendas and whatever, but there is a reason why things are happening the way they are, and it's to eliminate the middle class, you know, to remove any sort of independence, right? That's why, again, COVID hit, and what was really affected small businesses, right? Every large business and corporation, doubled and tripled their profits that year. That's why would that happen if everything is a free market, right? Like, there's nothing free about it. It was manipulated in such a way that the rich just got richer off all that. Right, so it's our job as traders to be able to jump in on those moves and analyze them before they actually happen, right? Not talk about the aftermath. But what I see happening right here on oil is there was a gap that formed at the beginning of last week as well. So like any gaps, it needs to be filled. As we saw this one right here, it formed on the 11th, and then it got filled on the 20th, right? So just a little over a week later. This gap was created on the 25th, and who knows, maybe it'll be filled April 11th or 12th, right? But all I'm saying is that if we take that last gap into consideration, right? So if we go from here to about, you know, let's say where we made our low after the first initial move up. So March 13th to March 16th took 6 days, right? Now from this one, we had March 27th to April 1st, right? So that took 5 days, right? So if we're anything like we saw back here, then if this move up took about 2 days, because again we have the weekend to be involved, 2 or 3 days, we're going to be looking for about 3 or 4 days on this end too, right? So there we go, something like that. All right, but again, just speculation. It's entirely possible. We're having very similar retracement values coming off these areas. So if we even draw the Fibonacci, right, we see the move to the downside just past the 618 right here. Okay, and then if we take the Fibonacci and draw it from the low to the high, right, the lower high, right, we see now it breaks through the 618 and 786 is where it rejects from. Okay, great. So what would that tell us if we do a fib retracement, right? If we go low, high, low, right? 2 potentials that could happen from this one. If it's meant to go higher, I would say that it's going to be aiming to go around this area, you know, somewhere around here. But the way that it's going is that we're making lower highs and higher lows, so we're kind of working out in the flag pattern. So what I predict is that, you know, you see exactly where that gap needs to be filled, right? That's where I'm predicting it's going to pull back before kind of trickling around and finally making its move higher. Whatever promises your politicians make you, trust me, it doesn't matter. This is going to go higher than what we've seen already here on March 8th, right? And again, it's only going to work that way unless Keystone Pipeline is opened up, unless regulations and red tape is lifted so that the companies who have leases on American land are able to drill with very little consequences or taxes to pay, right? Right now, yeah, they own the leases, but there's very little incentive to drill, right? Like if they put drills in the ground, they're going to have so many taxes and red tape up their butt that it's not going to be worth actually refining and producing everything that we need from that oil to be able to, you know, sustain our way of life. But anyway, that's my prediction for XTI USD, which again, it's the same thing as US oil. As you can see, it's the exact same move. The only difference is US oil can be traded by some brokers, where my broker, it's XTI that I can trade, right? Not a huge difference, but there's no sense in me analyzing something I can't trade, right? And again, if you just look at the prices, it's slightly different, but it's the exact same product. Okay. All right, Nasdaq. That's our next jam. So I'm gonna pop into the stocks here, and let me show you how Nasdaq looks like over the last few weeks. Okay. So, as we've seen, gaps have been closing from previous highs. You know, we finally broken those after dropping, which is fantastic to see. So let's switch it over to the 1 hour, so it's not so you know, crazy. And like I said before, what's inside of my grayed out boxes is when the indices is traded after hours, right? So 9:30 a.m. to 4 p.m. Eastern Standard Time is when stock market is open for all traders, and then before and after that, it's known as, you know, before market opens or after hours. Okay, so that is the gray box. Before market opens and after hours, we have some movement. Sometimes it's a lot, right? And if we have that kind of movement, stocks don't really get traded a whole lot, right? They kind of move arbitrarily in one direction or another, but it's not anything of significance. The only significance that's made there is, you know, potential orders that are placed, or if very large companies are able to buy them up, because the majority of people cannot trade before or after the market. Okay, you have to have a large account in order to be able to do that. And you know, as some can attest, you know, if you're trading with 10,000 or less, that's not going to be you. If you have 100,000 or more, then yes, you could potentially trade before and after market. The reason why I would say it's not really as important at that point, it's good to know before and after where market is opening and before it opens and after it closes, where it's going, because the next day becomes quite predictable, right? So let me show you here. Once we started going at the bottom, right, the only thing that I was unsure of was when this opened higher and did not close this gap, right? But as we've seen, as I've shown you in the past, there's only been 9 times, you know, since 2020 that these gaps have not closed moving upwards. Okay, I mean, do you really see Nasdaq dropping to 9,000 points? I don't think so, right? That's going to be insanity, and that's going to be a true depression. Okay, so the thing that it kind of encourages me is after a bear run and we see one red line that's not filled, that kind of guarantees that the bull run is going to happen. All right, so let me show you what happened right after this one wasn't filled. We had a positive day, you know, next one, look. Oh, that almost worried me, right? But boom, we just filled that gap, you know, an hour or 2 hours before close, right? And then we kind of kept going. We closed on the 1 day here, we filled that gap, kept going higher, and then we filled a previous gap from weeks ago, right? We closed high, we trickled down after hours, and we opened low and then went higher, right? Honestly, those are my favorite opens when after hours where the market drops, because the next day it's just like buy right off the bat and let it go. You know, those are very nice days to watch it climb. And sure enough, right? Like look at this gain. As soon as the market opened, we've had, you know, a 390, 400 point day. You know, even if you kept that, the lowest it would have dropped is another 168. And from that point on, it hasn't gone any lower. So if you would have held on to that for like a week and a half, you'd be up 1,200 points. Right, quite nice. So look, we've closed it the next day, closed it the next day, closed it the next day, closed it the next day. Right, now look at this one. It dropped on that day and the market went up after hours. As soon as the day opened, you know, it kind of trickled around that area and then finally went down and started going back up, right? But it closed it. Closed the gap, didn't close the gap, right? So because it didn't close that gap, and I saw the market going up, I'm like, we're going to have a pullback, right? That's the first good indication as to when we had a very strong run for several days. And then when we finally moved up after hours, but we did not close the gap from the previous day. As you see, this one was closed, and then finally it got closed while bringing the entire market down. And then finally on Friday, kind of closing where we opened, almost like we were, I think, 30 or 40 points off from previous day's close. Right, so 30, 40, 10 points, 7 points, 8 points, whatever, something like that. Wasn't a lot, okay? So what I'm expecting here is now that we filled this gap, one of two things can happen, right? It's either going to go up or it's going to go down, but how's that going to happen exactly? All right, well, here's an idea. If it kind of does something like this and opens down here, we're going to have a very strong day on Monday. If it does something like this and kind of opens a little higher before open, we're going to see this on Monday. Okay? And again, that's just my prediction. But so far, it's worked out pretty well for me, right? And if you guys are paying attention to this, you're going to be able to tell very easily where stocks are kind of moving in which direction as soon as the market opens, right? Because again, it doesn't necessarily mean that it's going to be headed that way the entire day. It just means that the direction is going to open very strongly anyway. I would say there's about a 65% chance it's going to open in the way that it needs to fill the gap, right? There's a 90% chance that the gap is going to be filled within a week. And I would say that overall, if, you know, we open and the gap is not filled by the end of the day, you know, and it's either higher or lower, expect it to be filled sometime during the week, right? There is only like 10%, 9% chance, I believe it is, that it takes longer than a week for that gap to fill, and less than 1% chance that the gap is never filled. Okay, so that's 1 in 100 days that there will be no gap fill, and our 1 out of 100 we just kind of experienced down here. Okay, so if that was day 1, That means 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. We're going on 14 days. So that means we have another 80. What do I want to say? 86, 85 more days of gap filling. Right? I think we're doing all right. You know, even if it's 50 more days, it's still very nice. You know, nothing really to worry about. But as you can see, there's one large gap to fill up here. So again, what Nasdaq is telling me, like I said, one of those two things. If we open here, right? If we open around 14,750 or maybe even higher, right? Like it doesn't matter as long as we're below this green line. This is the direction we're heading. If we open above this green line, right? If it happens after hours like this and we open, very likely this is the direction we're heading. It's not going to go very far. I kind of predict maybe we'll, you know, peak right here going low and then we'll reverse later on anyway. Like we are in an overall bull run, but we are going to have a couple days of pullbacks, right? So far it's been 1, 2, 3 days of pullbacks. And this pullback kind of seemed to even itself out. Right, so what I would be expecting, just because of the way that this ended, we might see it go slightly under and then go to the upside from open. All right, and just a prediction. Don't crucify me, guys. We're all trying to do the best here with the information we have. All right, so jumping back on the stocks here, let's see what's actually worthwhile. Okay, this is the IXIC index, so the Nasdaq index that can be traded. Right. Okay, so that is what a few traders go off of because they can actually trade this index rather than the one I have on Oanda. But I like this one because, you know, this index actually never closes, so it's very good information. Anyway, let's kind of go from top to bottom. So Apple, what do we see here? Apple, what we're seeing is kind of already going to its all-time highs. Like that didn't take long to recover at all, right? It makes me a little bit concerned because it shot up so quickly, right? Like it not just, it had its pullback. March 14th was the lowest that it went at 150, and then it shot up all the way to 179.67, right? So it went up $29 a share within 2 weeks. Again, doesn't seem like a lot, right? But we've had Apple split 4 times. So it's quite a significant move considering we just had our highs right here. The other similar one that had that kind of move was Tesla, right? And it kind of took me for a little bit of a loop because I was not expecting it to recover and move up as quickly as it did, right? Just based on what we've been seeing. But we've had what is it? We had $360 go up in the span of 2.5 weeks. Right now, it's slowly starting to trickle back down. But because of that, I know Tesla released news that they're going to be splitting their shares. Because of that, it opened up a gigantic gap. Now, if we know anything from the past, what happens when big gaps are formed? Right? Look at this guy. Big gaps are filled. Okay? Every time big gaps are formed, big gaps are filled. So here's another one right there, right? Almost filled, not quite. Right? So there's 2 potential zones that we need to return to. The first one I would say is we need to kind of get down to that $1,000 mark. And as far as Tesla is concerned, I believe that's going to be happening. If we don't, it's definitely going to happen later, so I would kind of prepare yourselves for that if it's not going to be anytime soon, right? If we go on first to make new highs before filling that gap, then, you know, I mean, I don't want to be a nervous Nelly here, but very likely we're going to be pulling back to that 1,000 mark before climbing higher, all right? So, yeah, I mean, let's say, for example, that we hit our new highs, we go around 13 or even 14,000, maybe by end of April, beginning of May. That would be, in my opinion, a very strong time to take a couple of puts, because, yeah, I mean, you're going to have a gigantic gap to be filled, and Tesla is no slouch. This has happened in the past, right? where it had a sharp move up and then it kind of trickled downwards, right? So don't expect anything different when it comes to that. And similarly to this is just the only thing, this time this gap was not filled, right? But that's because it had several months of steady growth, right? If you take a look here to here, right, we're talking 4 months, almost 3.5 months of continuous growth. Whereas here, we just had, what is it? That same kind of growth, we had it in 2 weeks, right? Maybe a week and a half. So not something I would completely throw by the wayside here. I would intend on this being a target. I expected it to be a target kind of 2 days ago. Not wrong about that, but it kind of hasn't really moved a whole lot, right? Like, it does seem like from high to low here, I mean, it did move $23 up and down over the last 3 days. But yeah, not really anything of note. It kind of peaked up, and I have a feeling we're going to be seeing it drop. So that was that one, yeah. But anyway, AMC, what do we see here? Nothing really too exciting, just kind of your standard movement. Didn't really have great earnings, but to be honest, that's not going to affect a whole lot of stocks at this point, especially when they're that large. The only funny thing is, when you take a look at AMC, watch this. Like, let's do a very large time frame. Let's do the daily, okay? So here we go. Let's see what this looks like. Okay, Fibonacci, as you know, right? So lowest point right here, highest point right here. Where does it hit? 618. Beautiful. Let's delete that Fibonacci and draw a new one. Okay, now we have our low point, and now we're going to go to our high point, which is right here, right? Our newer high point. Where does the Fibonacci retrace? Not quite the 618, but the 786. So if, you know, we want to go down that road, we can always draw this kind of block right there. Okay, now let's delete that fib. Okay, now we formed a new low, or a higher low at this point, and our higher high. You know, here we go. Where does it retrace? Oh, it goes lower. What does that tell me? That means that this was planned to go lower all along, right? Oops, if we haven't formed new highs, right, every time, this means that these are small pullbacks within the initial drop. So now, how do we know it's going to drop further? Let's take a look at this guy, right? Fibonacci from top to the bottom right there. Where do we have the 50% retracement? Okay, and if we look at that 50% retracement and we drop this down, you know, we are looking at, oh my gosh, imagine that we just had the pullback right now. So if you see anything like this kind of occurring in the long term, in the short term, this is overall going down and is doing very sharp retracements to these kind of anywhere between the 50 to the 786 zone for these particular stocks, because it's super simple just to be able to snag some bucks, right? If you don't believe that, watch this. We had kind of arbitrary numbers around 2000. We hit up there, you know, what's the lowest that it dropped? 786. Okay, so we'll delete that. We'll take it from the previous 786, which was this low here, to its new high. Where did it kind of start trickling around? 618. It hovered around that zone for quite a long time until finally it broke through it, right? And oh my gosh, what did it form? What did you form on that day? Let's bring it back down to the 1 hour. You know, it's going to be a little bit more clear this way. What did we form? What did we form? Oh my gosh, look at all those crazy looking gaps. Here's the first one. All right, I'll just zoom it out as much as I can, but anyway, here's the first one right there. I'll look so terrible with these tiny candles, but let's just drag it to the side as much as we can. Okay, there's one. Is that another one? Is that a candle? Am I missing something? No, that's not a candle. That is a candle, okay. Here is the other. Here is another. And anything else up here? Oh, shocking. Look, all these gaps were filled almost instantly, right? So there's nothing bringing it back all the way there. So now let's look at this. Okay, let's bring it back down to the 4 hour. Look what's happened. Look what has happened. Okay. That's what I'm talking about. Okay, so from its first initial spike, imagine grabbing puts right at the top over there. And I know the reason was it was a giant short squeeze and whatnot, but realistically speaking, it doesn't matter, right? It doesn't matter what the purpose of any move was. This always needs to be filled, right? Especially on a crazy ass move like that, there's nothing driving the stock up, right? It's gonna come back down, and it did. And then from that point up, it kind of pushed, went to the upside once again. You know, oh, maybe it's gonna do it one more time. But like I said again, right? I mean, like I said before, and I'll say it again, right? Even if you take that fib from the highest point to the lowest point, which is right here, and move it around, you know, the golden zone, as we like to call it, is this area. That's where we're gonna see average retracement spot. Okay, and sure enough, that's exactly where it happened. It kind of went right back up, it peaked, and it started dropping. Has it revisited these levels again? No. Right? No, it has not. It did a lot of bear traps and faked people out, but no, it has not. Okay? However, you know, if we knew and it was dropping, oh look, here's another gap to fill, right? And it was filled, right? Here was another, and that's where it was filled. Right? It will come back. If it hasn't, then it will. And it did. Same thing here. If there was a gap, it dropped hard, right? But it was filled shortly a couple days later. All right, what else do we see? So that gigantic one was filled, and look at this one. This is what I was showing you before. Here's where it got filled, right? Right there. So the gap that formed on May 26th, 2021, finally got filled January 21st, 2022. 7 months later, yeah. But it happened, and there it is. Okay. Do we have any other gaps right now that we see? I don't see anything else really that needs to be filled right now. So it's just going to be following its standard flight path, right? So if we take this high, right, because that's the highest point, I guess, the lower high, draw a fib from the lower high. Let's actually click on the fib though. Draw a fib from the lower high right at the tip of the wick to the lowest point. Look where we retraced from, or where we traced to. Right, 618, like I was saying, kind of that golden zone. If you're expecting, or we're expecting this to keep going up, I would have really thought as to how far, because if we've hit a low already, it's only a matter of time, right? So initially, it would have been this that we formed the low, but as soon as we made another low by even just a smidge, right? That is our new standard that we're looking at, and how far it'd be pulling up would be, yeah, around that level before dropping again. Extremely predictable. All right, guys, AMC, extremely predictable. All right, as far as it goes right now, yeah, there's no driving force to keep it going up, right? It's just kind of going back to its normal value. So even if we draw a trend line, right, kind of like from one high to another high, it doesn't really give us any real indication as to what's going on. It has to be, you know, slightly lower when we want to snag them, right? But that's only as accurate as you want your trend lines to go. Fibonacci is much more accurate. AMD, what do we see with AMD? So a gap was just formed actually a couple days ago right here. So we'll have volume bring it back up to that level. You know, otherwise there's really not much going on. It's going to follow the standard path of the market. Oh, excuse me. right? Like I said, gap was formed here and it was filled here. Done. AMGN. So yeah, this, what do I have this labeled as? This is still on the Nasdaq, so I don't exactly know what the significance of this being filled is, but it didn't quite make newer lows compared to what happened back in December, as a lot of other companies did. It's not following the same flight path as a lot of Nasdaq stocks, right? However, with that said, it does still move quite sharply, right? So I would be expecting that to be filled at one point or another. I can't say exactly where, but judging from where we've had this high, we had one rejection off the 88.6 and slightly rejecting off that, even though it made a higher high. We'll see if it makes a couple more red candles, then it'll be a nice move downward. Amazon, you worry me a little bit, right? Amazon left a bit of a gap right there, right? That wasn't quite filled, but at the same time, I think the attempt was made. It's just, it wasn't quite finished off, right? So, I mean, just a little guy right there, which is the equivalent of like $15, $14 for a, you know, $3,000 stock. I wouldn't say that's a big deal, but you know, everything's relative. We'll see where it ends up going, right? But as far as a target for where Amazon would be going or should be going, there really isn't any other gaps to kind of take a look at. There was a very nice one here during earnings, right? So when that happened, you know, it has to be filled, right? Sure enough, it was, right? February 24th. That's the first time that the Nasdaq dropped in its entirety, right? And then finally on March 8th, it started moving up, and then that's where the gap was formed a couple days later. So yeah, as far as Amazon goes, let's just do a fib. Let's grab it from top to bottom there, okay? So we saw it hit that 50%, but now we'll go to the absolute bottom. Okay, so it just kind of crossed that golden area and rejected and started pulling down. Like I said here, right? I originally am not expecting it to pull down that far, but judging as to where some of these stocks are and where their gaps are, we could be seeing something go maybe even that deep, maybe down to 14,000 before going back up. Like I can't see it dipping that low. I mean, that's losing almost 1,000 points in a couple of days. Hey, but you know what? At the same time, in almost 2 weeks, we've gained 2,000 points, so it's definitely possible, right? To lose 1,000 more points in a couple of days, totally possible, right? And that would kind of explain these gaps to be filled before moving back up. But we'll see, right? Activision, this one has just boggled my mind. It made one gap and then kind of filled it with another gap, right? So this is the only stock that I've seen on, and I don't really know what to make of it, right? Like, it was formed there, and like this is kind of the continuation of it all. Like, it's this gigantic rectangle, right? This is where price needs to fill, and I can't kind of understand why it's doing the things that it's doing and why it moved this way, but you know, I'm staying away from it. I don't know what to think. BlackRock, I just put it up there kind of arbitrarily. Caterpillar. So, you know, Caterpillar been kind of blowing up. Excuse me. Kind of been blowing up with Nasdaq and with oil prices going up. So that's, you know, a twofer, I suppose. But yeah, Cad is traded on the New York Stock Exchange, I believe. Yeah, NYSE. So it's not Nasdaq, it's just the New York. So yeah, it's what to think about this one. I don't really trade this one. It moves very slowly. Like, you know, you do see gaps that need to be filled, and they are eventually, just like everything else. But yeah, I don't know. I don't really have much of an interest trading Caterpillar. Costco, let's see, Costco, you know, same idea. Gaps need filling, they get filled, and up it goes. And right now, where are we? we formed brand new highs, right? So it's like nothing affects Costco. And being a frequent shopper at Costco, I kind of understand why. You know, cheaper prices and you get money back, and oh man, it's such a draw for a family, man, honestly. Right? When my local shop tries to sell me milk for $8 a jug and I can buy it at Costco for $4.50, I mean, you know, why am I going to spend more money on the same product? Right? So from a consumer standpoint, yeah, Costco is fantastic. From the support local person inside of me, it's like, I would love to, but you can't arbitrarily raise the price of something that is available literally everywhere. Right? Like, have some sort of unique product for me to want to shop at your store, not just for the sake of saying it's local and making me feel bad, you know, because I won't. Chevron. Yeah, 2 gaps to fill, 2 gaps closed. There we go. Done deal. Right? Oh, here's a little guy right there that needs to be closed off. Oh, sorry. But if you take a look at Chevron, it's been moving very similarly to U.S. oil. But yeah, gap filled, gap closed, done, easy. Disney, you know, as good as the company that they have the potential of being, right now I have no interest in having anything to do with Disney just because of their specific agenda, right? And I really don't want to get into it, but that kind of turned me off on buying any of their products and trading their stock, right? I kind of like to trade companies, like I like to own stocks that have some sort of moral integrity behind them. But when you're looking to indoctrinate children, you know, that's not really for me per se. You know, I don't care if you make content for adults, and adults can make their own decisions, but 3, 4, 5, 6-year-olds, like whatever you tell them, they always believe to be true. And any of you that have kids, you know exactly what I'm talking about, right? So Disney right now poses a danger to my family, and I want nothing to do with it. DocuSign. Look at this gigantic gap. Holy bananas. You want to talk about filling the gap? Look at this bastard. Holy cow. What the heck is this? That's a gigantic gap to fill. This little dude was already done. See, look. Earnings. Oh no. Earnings were great, but it still dropped. How is that possible? Because it doesn't matter. Earnings were great here, and it still dropped. It doesn't matter, guys. It really doesn't. Alright. All I'm saying is right now, from its lowest point of $71 a share, it's now up to 107. I still think it has the potential to go up to 226 within the next month or so by filling the gap. Like that's the only logic I'm playing with here. Like, there's no other reason, you know. But DocuSign, there's nothing wrong with the company. Right? Like, even after COVID, it's still kind of on the top shelf of everybody's list of using, because this is it's a very fantastic way of getting official documents signed, you know, when you're not in the vicinity of each other. Like, it's a fantastic tool, a legal tool, right? And I don't see it disappearing anytime soon. It's kind of the standard as to what it's been doing. So, you know, as far as it losing steam and now being really valued at $100, I doubt it. I have a feeling it's still going to go up. So, yeah, this might be a very smart time to jump into it. Let's see where else it would have been. Right, like we had spikes here and there, but every gap that it was at was filled. And yeah, like it's a steadily increasing company. You know, it had a really nice boom, and then this. You know, how is it every single time? Look, earnings, good, right? Earnings, good. Earnings, good. Earnings, good. Like, it wasn't as fantastic as before, right? But let's see right here. So reported estimate, you know, it was estimate was 0.46 a share. This one was 0.48 and actually went up 0.48. So yeah, this actually did worse this quarter than it did last quarter, and yet, yeah, whatever. I'm not gonna get into it again. DocuSign, I would definitely jump in on. The Dow, you know, it's not the Dow Jones, it's Dow Inc. Electronic Arts, nothing spectacular. eBay, too slow moving for my taste. EGLX, that's just a company, Canadian company I have invested in. Man, they are disappointing me. It's moving almost like AMC, right? Like every time you draw the fib, it's just, oh, balls. You know, going from high to low. You know, every single time we have a retracement, 618 exactly. It just hurts. It hurts to be right. Facebook, giant gap to fill. Although similar story with, doesn't really matter. I'm not a huge metaverse guy. You know, it has a potential to be big, but be forewarned. You know, there's a reason why people are pushing fake reality. You know, it's because our real reality is going to suck real bad real soon. So hey, why not just live in a virtual reality for the rest of your life? FL, Frontier Lithium, very good company. I kind of discovered them back in early 2021 when they were around $1 a share. And that's when I had them bought, and then I sold them because they weren't moving. Oh, woe is me. Could have tripled my investment with these guys, but it is what it is. GME. Oh my gosh, are we going to find another one that follows the exact same pattern as AMC? Is that even possible? Let's see. Alright. So let's take a look, everybody. Alright, this is entirely all its movements. So here's the high, here's a low, here's that 618 area, golden zone, like I said. Wonderful. Okay, so that's from peak to low, and then our next peak. Great. From peak to low, this one was super deep, so we could almost move this one more time over right there, right? Because it was so deep that it almost made a very similar peak, but made a low. Oh my gosh, between the 50 and the 618 again, crazy, and then it went lower. I did not expect that. Oh my gosh, we just hit that area, and now we're starting to go down again. Who would have guessed? DAX filled its gaps, except for the one up here, you know, around the 385 mark. It's kind of where we're looking for it to move a little higher too. Might take a little while, you know. I mean, it's dropping harder than Nasdaq actually is, so it doesn't really bode well for that. I mean, off New York Stock Exchange, I would think that the US 30 is a little bit more applicable, right? And we can see that it bottomed out a little bit, well, almost the same as Nasdaq, right? Except it had a harder pullback, right? So now we're seeing a deeper pullback than Nasdaq is doing right now. So a lot of the stocks are following similar suit that are on the New York Stock Exchange. Similarly, like Home Depot, right, which is right below Goldman Sachs. So it's a perfect segue. You know, I'm expecting it to come up, kind of pop up right back here around the 380 zone. Again, we've barely managed to fill this gap here, kind of halfway done it. Like there's about $3 left to fill. We've bottomed out twice, which is surprising. I wasn't not expecting something like that to happen. But I don't know, Home Depot's had some interesting stuff in the news recently. It's still doing very good for earnings. So yeah, I don't see this staying around the 300 mark for long. Right. The last time that we were below this was you know, this time last year, and you know, again, that's because it was kind of breaking its previous high, right? And then when COVID hit, it was just kind of a spike downward before it recovered. pretty quickly. Like it dropped, I would say, from where it was at to bottom of COVID levels in about 3 weeks, and then it recovered like from like back to the same levels about like less than 3 months later, right? So not too long. Whereas here, what we're seeing is a super deep pullback, right? Considering there's really nothing at this point happening, nothing new and exciting, right? So for it to pull back from its all-time high of $419 down to $300, you know, that's a little over 25% of the share value that it has. I would say that a reasonable valuation for it is around the 330 mark, you know, but again, I'm still seeing very bullish on this, even though we just had a deep pullback. You know, I feel that we're going to be seeing it around the 380 mark. Honeywell, you know, not too terribly exciting. There was one gap to fill right here, and it's coming close. You know, we are how many dollars away from that? We're probably about $10, $11 away from filling that gap, and they could do whatever it wants. You know, we have another small one right here in this area. Not a bad company overall. You know, again, had kind of crazy growth. You know, this gigantic gap was only just filled this year, right? All dating back all the way in November of 2020, right? So it took quite a while, but it did happen. Right, HPQ, I wouldn't worry about that. It's another dead stick Canadian stock. IBM, it's moving a little bit differently than a lot of other tech stocks. Not really much to see there though. Intel, a sharp drop that we just had, but we had this gap filled. We have another gap to be filled around the $44 mark, right? So maybe that's where it's going to be headed before we finally see movement for all these. You know, over the long term, we have a lot of tech stocks looking bearish because they haven't made new highs just yet. They've attempted, but they haven't gotten there. Intuit, it is tax season coming up after all. You know, where did we have the spike in November that it kind of hit its peak? Right after earnings. You know, did very well. But, I mean, for it to be worth $700, like almost on par with the low that we had on Tesla, I don't see that happening, right? So, I mean, we're talking massive differences, right? So Tesla, let's take a look at earnings on Tesla, right? We had 14 billion, 13.7 billion, right, for a quarter, and then next one was 17 billion, and then we're talking about a stock that has a very similar price to it somewhere up here when they're making quarterly revenue of 2 billion, you know, and then dropping 2.7 was the estimate, 2.6, so still higher than the previous quarter, but it tanked, right? So again, for it to be valued at around the 400-ish mark, again, I don't really know too much about this stock in particular, but I can't see it being worth this much money. Johnson, unless of course it has a limited amount of shares, that's really the only thing that can that could work in its favor, and if, you know, more shares have been bought up internally. Johnson & Johnson, good recovery. It's showing a steady pace upwards. Merck, huge gap to fill, and it's getting there. Right. Microsoft. Yeah, there's really not much going on here. Just kind of standard movement for this tech stock. Not a huge fan. Netflix, big gap to fill. Kind of started trickling up, and it will. You know, I mean, I understand Netflix has a lot of competition now, but it's still leading the market as far as the streaming service is concerned. Everybody else that jumps into there, they don't really have, you know, a blank slate of being able to pull every movie into them. They specifically, like Disney, uses Disney movies, right? Everything Disney owns. Netflix doesn't just use the things that Netflix owns. They buy rights and properties from other companies as well, which if Disney or HBO would start doing, I bet you they would have a lot more subscribers. But right now, that's incredibly limited. Right? You could subscribe to Disney Plus for 2 months and watch, you know, if you watch an average of a movie a day, you could probably watch, you know, the majority of the content if you haven't even seen it yet, which, I mean, I would assume that, you know, a person in their mid-30s or early 40s would have seen a ton of Disney movies with kids, you know, or growing up. You know, what's the sense of paying for a streaming service just to rewatch all your nostalgic fantasies, right? I mean, once in a while it's fun, but to rewatch every single thing every month, I don't know, right? That's just my personal take on it. At least Netflix has a library that is changing every so often, right? They get licenses, they lose them, they get new ones. It's all relative that way. Neo. Let's see, Neo. What are you showing me? That's troublesome. Formed a gap way down here, and there's really nothing else to fill except for this guy. Yeah, that's all she wrote there. Nike. Yeah, everything kind of gapped up from that area, but it still has one around the 155 range to fill. Nvidia. Great stock. Moving as predicted. There's really no surprises here. Wow, this has just been a slow bleed. Holy Pinterest, that is painful to watch. Yikes. And how does that work? Earnings? Okay, $500 million earnings. About the same earnings. Better. That doesn't make sense. Why is it dropping so freaking hard? Realistically, though, there is still a gap to fill. So if we go from there, that's the price point. It has to hit back. Why did we drop so hard from August 21? I don't know. I'll have to jump into that one to look at it. But as far as it is right now, to go from its highs of around like the 90, the 88 to 90 range, to be worth $24 a share. And there's high potential in there, I suppose, but I would need to learn a little bit more about the company and see where it's actually headed. But it's, I don't know, I think it's lost a lot of steam based on tons of social platforms that, you know, actually work a lot better than this. Anyway, not really too crazy about that right now. PayPal, here we go. Two big gaps to fill. One of them right here, and the other one way up here at the 220 mark. And it's currently at 116. So definitely a large potential climb left there. Roblox, big gap to fill here as well. Like again, when this started climbing, everybody's super excited, but I mean, for Roblox to be valued at $142 a share, when it's it's like Minecraft but worse. I don't know, guys. Like maybe I'm not as much of a gamer as I thought myself to be way back when, but for something that has graphics of, you know, maybe a game that was kind of choppy at best in the 90s, and to have such a following of little kids and be pay as you go, I mean, I see this being incredibly overvalued. Alright, Roku, same thing with Roku, giant gap that it filled, that's crazy, at the $92 mark. And now I expect it to be going up around the 260. Like we're sitting around the 125, 126. But yeah, this thing dropped real hard. Alright, we are expecting a recovery sometime soon. And yeah, I mean that potential soon could be very, very soon. Like we just had the deep pullback and it's not making any lower lows. I have a feeling that, you know, as far as it dropped, a fair valuation would be back around the 260 mark. You know, definitely around the almost $500. It was definitely overbought. Definitely. But yeah, this has just been kind of a slow bleed all the way down to $100. So I mean, it's lost what, 70% of its share, 80%. Like, that's painful, right? Spotify, similar story here, right? We've had a peak of, what was it, $386, and now it's down to $150. It could hit a low of 118, right? So definite potential here as well. Lots to take into account. And now that people are starting to get back to work, you know, back with the commutes, back with all this sort of stuff, right? There's still gaps to fill on this guy too, about $25 above its current price. Guys, if the bottom of COVID, like that March 18th, was a good indication to kind of reinvest, this would be kind of the sign for you right now. Like, we've hit our bottom about three to 4 weeks ago. If things continue the way they are, we're going to be seeing a nice bull run for quite a bit of time. Like, we've had our bear run, you know, the bear runs that we see like once every 1.5 years, potentially 2 years, right? We've seen it happen. Now it's just going to be either consolidating or going up. Like, this is this is kind of the standard movement of all stocks, right? Especially ones that are kind of tried and tested and proven to bring in a stable revenue. So for this to kind of stay around the 150 range, when it has a potential go back up to 400, I don't see it staying here too long, right? Let's see, Tesla, we already went over that. There's a gap to fill here, one up there. This one was done. You know, this moves very quickly, and it's interesting to say. Like, I don't think right now it's worth $1,100 a share. I think it definitely has the potential to be worth this and even more. And now with the stock split, I mean, this really helps a lot of investors that don't have a ton to put in to jump into this, because we know the direction that Elon Musk has taken this company. It has such fantastic long-term growth. Visa, lots of gaps, but you know, they kind of seem to be filled more than anything else. Like, little ones are left here and there. The big ones are typically cleaned up. Like, look at this gigantic guy that was made right there and then filled here in February. Oh yeah. As far as credit card companies go, doesn't really do much for me either. Not something I'd like to invest in. There's definitely other stocks that move a lot quicker than this. Walgreens, yikes. It's hit a lower bottom now after earnings, which is, again, surprising because it did well. But, you know, that causes a little bit of, you know, contention right there with a gap that we know will be filled. It's just a matter of time. So the good thing is, it's after the dividend payout earnings came out. You know, it's going to start rocking up. I would see at least going back up to $48, maybe $49 range here. If not, maybe back to 54, right? So it's been very stable, though, as far as the stock is concerned. This is a good time to buy it when it's low. Dividend payout is, you know, per share, it's 48 cents. So if we're looking at it's at $44 a share and they pay out 48 cents, so we're looking at about 1%, a little bit more than 1% payout. So nice thing about these is if you have $1 million worth of shares in Walgreens, you're going to be getting about what, $10,000 every dividend payout. You know, is it the greatest thing? I guess it's all relevant, because relative. I mean, because if you're looking for you know, some growth in your stocks, but dividends are just like straight up cash, right, that the companies make in excess. It's not like the stock's value. So yeah, I mean, I guess it's great, but not if the stock isn't really moving, because the whole nice thing about dividend payouts is that they would increase over time, not just stagnate. Walmart, I mean, it's always going to go up, right? Walmart is basically like Costco for everybody who doesn't have a Costco membership. It's similar, has dividend payouts as well, higher than Walgreens. So yeah, I mean, if you own a share, thing is though, right? I mean, it's higher, but if you're looking at 56 cents per share, Walgreens has what? We're talking 48 cents a share, and their shares are a third of the price. So realistically, better dividends than Walmart. XOM, Exxon Mobil, similar to Chevron, doing well. And Berkshire Hathaway, is there any doubt? If you don't know what to invest in the best investor stock. I mean, why even second guess yourself? All right, I had this in when it was 260. Now it's 350. I mean, what do I care? You know, this isn't something that it's going to be dropping anytime soon. We know Warren Buffett is a very smart investor, and he knows how to take advantage of the market. He's been around for a long time, and he has a lot of smart people working for him. So, you know, if you're in doubt at all anywhere where to put your money in, any tech stocks or whatever, go for the sure thing, right? Like, what's the sense? Even the S&P or, you know, the Nasdaq Index, right? If you're able to just invest in those or mutual funds that are very stable growths, and go nuts. Like, what's the fear? All right, so that's everything wrapped up. Hopefully I covered everything that was on the agenda. Forex and stocks with a little bit of Bitcoin. You know, if you guys have any questions, comments, you know, anything that you want to add, by all means, you know, I'm more than happy to do videos that are requested. But as of now, thank you for watching. See you next week. Don't forget to like and subscribe.